Hello, Warriors. How's everyone doing? Everyone ready for the CPI? Hiya, Bran, AJ. Hello, Kajel from Thailand. Welcome to F.A.C.E. You found the right place to learn and earn. James, how are you? Hi, K-Man. Glenn, how are you? Kurt, Turnaround Tuesday. Yes, it is. Hiya, Stel. Great to have you here today. Miss looking at your clean charts.
Morning.
How are you?
I don't think they're clean, but yeah. How
They're
are you?
they're they're great, man. I miss them. I miss hearing you every day, so it's great to have you. I just want to show one thing, and then I'm going to let you take over. And it was a long time coming, but look at the power of the first wave that we had in the miners. There's Endeavor, and this was a Friday that signaled the beginning of the bull move in miners, which has been so disappointing for people for a long time, down 30, 40, 50%. Here's another one, Fortuna. And these are silvers, and here's the ETF for the juniors. Pretty powerful move. I mean, you had 30% moves in a week or so. So, what do you do now? I would say, like I said, the first week, it's not too late. It's just starting. And now there may be some kind of pullback for a wave two, and that could be the last bus stop. So we'll see what happens here on with the number. And with that being said, Stel, I'm going to stop sharing and give you the charts and save my energy for the interview.
Thank you, Dale, and you are spot on about miners. I'm gonna talk about those as well. So let me share my screen. Hello, everybody. Um, so see, hello, CPI today, and it's important as always. We are at a pretty critical level in yields and the dollar. Yields, we had an impulsive, very strong move lower from end of October to, end of the year, basically. Now, what I think we're doing is we're correcting. We have been correcting. There is a very important level, probably just below 4%. And if you go to the 4-hour chart, this looks like a consolidation, right? Like some kind of consolidation before a move lower. Of course, CPI could change all that. If it comes in hot, then we're gonna be looking at other levels. But I think for now, the trend remains lower for inflation globally. It's stickier than expected, but it's still going lower. And Bernanke, I keep saying Bernanke, damn it.
I do that too.
Jay Powell has told us a couple of days ago that they're not going to wait for inflation to hit 2% before they start cutting. So he's, I wouldn't say throwing in the towel, but he's becoming more dovish as time goes by. Because let's face it, we know that the economy and the US economy and the world cannot withstand high rates for too long. And this is because the system is highly leveraged, et cetera, et cetera. So we have a pretty important level in the yields coming up in the 10-year. The dollar is a similar story. We have again here, if you go down to the 4-hour, oops, not 3-hour, 4-hour, whatever, it doesn't matter, same thing. It still looks like some kind of a bearish consolidation here. We know impulsive move lower, consolidation. I think Greg, I saw his analysis yesterday. He's been talking about the same thing. Very important levels around 102.40 in the Dixie. If that gets taken out, then well, yeah, 101 and then 99.70 or whatever that level is. So I fear that the inflation print is probably going to disappoint to the downside, maybe a smidge, as it has done over the past year or so. And that I think is going to be a trigger for the next leg lower in yields and the dollar. The interesting thing is that equities, of course, hitting new all-time highs. Everywhere I look and read and speak to people, everybody's saying, oh, they're overvalued. We're going to be shorting them. And I think that's what's been driving them higher and higher on a nice 45-degree angle, right? It's been relentless. Any pullback in the S&P, in equities in general, is met by buying. Um, does that make sense? Not that much sense, but I really wouldn't get in front of this right here. I think the next 100 points are higher. And I know it sounds crazy because valuations are pretty high anyway you look at them. But for now, the path of least resistance is higher. And if you read our weekly newsletter that we send out on a Sunday evening, we've been saying this for weeks and weeks and weeks, and I don't think anything's changed yet. At some point, we're going to have a move lower, a proper move lower in equities, but I don't think we're there yet. It's we're going to be focusing on inflation. We're going to be focusing on unemployment. Payrolls last week, the headline number came in higher than expected. Revisions were lower, as always. The interesting thing is that I don't know if you talked about this on Friday. The birth-death model that the BLS use added about 140K jobs. So if you subtract that, then the net number is a lot worse than the headline suggests. We did have an increase in unemployment rate without the participation rate moving, so that's not good. Overall, the headline number last week was good, but everything else wasn't. So it's kind of the same story that we've seen over the past months. Employment seems to be okay in the US as headline numbers, but in the behind the scenes it keeps deteriorating. So I'm a little bit worried about that. But for now, the numbers are still okay. Dale mentioned gold and miners. Well, gold's hitting new highs, but miners have been underperforming massively. There's a simple reason for that. Higher yields means more difficult borrowing for them, and they are leveraged, and also rising energy prices are also bad for them. But the divergence has been glaring. I talked about, I think it was 2 weeks ago in the chat room. I said, if you're looking at silver miners, this is the place to do it. And we were right down here. I think it was 2290 or 23 when I said it, and I actually did right. I'm getting long a little bit here, and it's done very well. But now we're kind of caught between the DMA. So it will depend, as with everything else, it will depend on in the short term on inflation and all that. But I think miners have a really good outlook for now. GDX is not as clean as SIL. SIL I like because we have bounced nicely. Next level is probably 28 and change. GDX is a bit not there yet. We need to break out of this descending trend line, which is huge, absolutely huge. Break out of that, and all bets are off. But again, we're going to be waiting for CPI for the Fed. If I'm not mistaken, the markets are now expecting just over 2 cuts this year, which is fine, to between 2 and 3 cuts, if I'm not mistaken. So that's basically what the Fed has been guiding. And the market, if you recall, a few months ago had been very optimistic about rate cuts, pricing 6 at some point. Now we're back to what is probably fair. And I think that the risk for cuts is that we start seeing more. This will depend obviously on the state of the US economy and how well it does. But I think Powell and the Fed are ready to start the cutting cycle, provided that inflation does not start ticking up or anything like that. So it is interesting. As I said before, yields are at a very crucial level. I'm going to be watching this like a hawk, and this structure here looks like a corrective one. And if you take this move, and this takes us well below 350, but we take it one step at a time. For yields to drop a lot more from here, I mean, and I'm talking about 350, we're going to need to see a recession. And
Yeah, Stelios, hey, it's Nick.
hey, Nick, how you doing, man?
Hey, how are you doing?
Very well.
I also, if on that chart, I'm looking at the TLT, which is just the inverse of it, but it actually looks like a bear flag, doesn't it? Well, the TLT is a bull flag.
Yes.
That
Yes.
points kind of to what you're suggesting. We could see, um, much lower yields. And I'm
Yeah.
also been thinking about the rate cuts. I was looking at that this morning to see how it might shift going into after CPI, and it looks like right now we're pricing in 4 rate cuts with a 80, I think it's an 80% chance that we cut in June. Let's
Okay.
see.
I
I'd like
had a
to
look.
interject that flag, and it's a beautiful formation, that if we don't get a benign number, since we didn't even retrace 50% during this flag, that we
Yeah.
could have one more trip down to the bottom of the flag, and that would take it towards that 50% level at 91, worst case 89, if we don't break out here.
Yeah, that's my goal to try and get long there, Dale. And to correct myself, it's an 80% chance of a cut in May. So I'm
Oh, for
watching to
my
see how
birthday.
that might shift today, and because that's really been massive here in the markets. And we've been flirting with the idea in the chat room over the last, oh gosh, probably a year or so, of when correlations could break and when equities might rise and fall with yields. I think we could be actually kind of close to that. Um, and I have a few reasons why. I can, I, well, I,
Yeah.
I can share
Uh,
my screen if you guys would like.
Yeah, no problem. I agree with you, by the way, because taking the S&P, it's been driven by 7 stocks. If you look at the rest of the S&P, the majority are down for the year, and at some point this will reverse. Nvidia and the other Magnificent Seven cannot keep going forever. At some point, reality steps in. This actually reminds me how Tesla was trading a couple of years back when the market was pricing. The market cap of Tesla was bigger than the next 7 car makers. So the market was pricing that Tesla would have a 50% share of all cars in the whole world, which is ridiculous. So
Which
this kind of reminds me of that, and eventually this will go the other way. But do you short these stocks at the moment? Of course you don't. So it's an interesting situation. Look, I'm gonna stop sharing. You can take the screen, and we go from there.
okay. I know Ryan and Kman are here as well. Um, just to give the devil's advocate here on the stocks. Um, if you take a look here at the all-time high in 2021, 2022, down to the lows of 2022, we actually hit the 127% extension up here last week, which also coincided with channel resistance. Um, I find that significant, but really like what Stelios was just mentioning how strong Tesla was, and how back in the day, and right now we're having mainly 7 stocks drive this. I have my Mag 7 composite chart, which basically condenses all of them into one chart. And we actually did something similar. If you take the highs from November of 2021 in the Mag 7 composite down to the lows, we actually hit the 161% extension last week on that pretty sizable move. I mean, I was looking at Nvidia on the weekly and how ugly that candle was, but also on the daily, the volume was the highest since August of 2023. So pretty sizable amount that we saw exit. And I've also been noticing some CTAs get out, but just to kind of walk through the dollar as well, I think Stelos is right. We're at some critical levels ahead of the data today. Uh, we just tagged the 618 on Friday. I think that's extremely critical support. In order for you to get, bullish dollars in the slightest, I think we need to get back above 103.25. And I also noticed some pretty significant support Ryan was pointing out as well in the chat room. We have triple confluence in the euro for me right now at 108.70. So we have, just to try and clear up the chart, I'll make it a bit easier. And then I'll walk it back. Oh, I thought it was going to remove that. So right here at 108.70, we have channels, ascending channel support. And if you go back, you take this former trend line that acted as resistance at one point, that if we got back down comes in at 108.70, and the 38.2% retracement of this recent move comes in at the same level. So I love triple confluence. If you're looking to get along the euro, I think that this is not a bad bad area to try if we dip down there. But right now the euro looks pretty darn bullish, and the cable also ahead of the data is not far off from the 786 of this move. Right here, we got pretty darn close on Friday. I'd say we pretty much got there. But that's at 129, and then right above 129, you have, you know, just that big, you know, round number 130. You know, and currently at the moment we have a false breakout. You know, Kman Ryan, you guys have any opinions here on the
Hey, Nick.
cable and the euro here?
Nick, Ryan Varghese has been asking about RTY. I believe that's the Russell, which is the only index that hasn't made new highs.
I was looking at the Russell in this ascending wedge, and thanks, Dale. I think if we get back below, I'm looking. I guess I'd like to see us take out one
Look at
like
that
really
divergence.
close firmly. Yeah. And speaking of divergence, Dale, would this be a penta drive?
Yeah,
It's
been
crazy, isn't it?
developing for a while.
Yeah, and I would really like to see, you know, if we could get. I mean, I'm short. I took a short based on what I just mentioned a little bit ago. I'm not large size at all. But what if I could see anything? I'd like to see, you know, us get back to the 4775 level, which coincides closely with the previous top. You know, if we can close below 50-50 in the S&P, that's really where I would like to try and get aggressively short. I think that's also close to this gap here that we got from NVIDIA earnings. We'd have to get back below, yeah, that's 50-35 is where it would start. It's just been an extremely strong market, and yeah, I already pointed out TLT. Looking at this as a bull flag that would point up towards around 114.5 or so. Just overall, extremely just a weak risk environment. I did look at a couple stats here. We do have VIX expirations this week going into OPEX. So this is a chart showing the this is some data showing the S&P performance in the 2-week March OPEX around a trailing month that's been positive in the last 40 years. You can see pre-OPEX week, relatively strong week 1, 17 out of 5 weeks are up. And then you can see into week 2 that it's typically a lot weaker. And I know seasonality wise, I've pointed out before that we tend to see a sell-off into mid-March. Definitely haven't fully gotten it yet. S&P is still pretty darn strong, but yeah, I think we're due for some weakness, you know. But you know, that being said, overstretched can become more overstretched, and you really have to play your risk carefully because, yeah, just going to the ForexAnalytix website here. Are you serious?
Don't show your password, mate. Don't show your password.
Do I already have it up? I don't. Okay, well, right now, last year, I believe we had a 0.6 print in March. And maybe it was, I'm sorry, 0.5. All I know is there's a 0.2 runoff. So even if we come in line, the year over year is still gonna fall from 3.9 to 3.7. You'd have to get a pretty hot print to really change the year over year. In the event that occurred, I do think risk would come off the hinges. But right now, I think the risk is for the dollar at the 618 to break lower and for equities to continue to press all the shorts that got in. I know I just spent a little bit of time talking about how it could turn around, but that's the risk. We're closer there, right? We're a lot closer to giving pain to the upside and risk. So if anyone else has any other comments, you know.
Let's take a look at Kman's charts, which we haven't seen for a while.
Whoa. My charts? Come on.
Yeah.
Wow.
They're nice charts.
They're only for people who have a bit of a distorted mind.
Well, that's everyone who's a trader.
All right. Okay. Yeah, I'm going to do it quickly because I was planning to talk earlier, but because I have to prepare my trading books. Okay. Yeah, Nick said it here. This is the zone in the euro dollar. The first one here around that 50% as well of the move that we had down in the start at the start of the year. That's the 109.15.17, which has held yesterday. So that is the first level, but it's a bit close for comfort. So I would look at this one. And then if we get a disappointment on the CPI, I think we get a retest here. 109.75 is a bit of a level. And then obviously the top that we had above here, if that starts to break, that's going to take a pretty sluggish number, I'd say. Then we probably trade up in the 110s. I think around perhaps 110.5 to 110.70 or so. Cable's been an interesting one. Cable's been sold this morning on the back of what the market perceived as a bit of a tad weak employment report, but really we're still around 6% for the earnings. That's not justifying a real cable sell-off, in my opinion. So there is room, to me at least, there is room on the cable on a disappointing report to retake this 128 figure a quarter and then start to move higher. 127.60 named by quite a few people. It's been a prior high, but I think really for me the most important zone is now going to be 127 figure a quarter here on the cable, where we've broken up out of this little triangular formation. That's going to be the level. Moving on, I think the Aussie is interesting. We are trading just above that 66 level, and that tried to give way yesterday. This is actually a daily, because I'm looking at the cloud here, which is also bang on the 66 level. So the 66 level for me is where it plays once the data are done, perhaps a first wave done or so. If that holds, then I think we can move back up to this prior high for a starter. In turn, if we start to close below 66 and 65.80, then we're probably going to put some pressure again on this big zone 65.25.40, you know, where we broken up from, and which has always been a zone where there was quite a bit of activity. That for those. And we have to quickly take a look at, no, this is not the right one. This dollar Swiss here, I showed in the room this morning. So we had this move higher since the start of the year, stopped right where where I expected it to stop as well. Now we are actually trying to break back a bit lower. I think this is going to be quite sensitive to those US data, especially with the potential risk that S&P may do something the coming week on their meeting. If we get a retest up here at 87.90, but we are failing up here, give it perhaps a little bit of room on the data outcome, up to this trend line, perhaps just above there. But it fails again, we could trade a little bit lower, and especially on a lower one, I would say this might be in for a test back down to below 87 on the dollar Swiss. Because if the US CPI comes off, that means inflation coming closer, and low yielders usually like this kind of outcome because it reduces interest rate differential. So this dollar Swiss may be on the move this afternoon. I'm going to keep a very close eye on this one as well. And with that, I'm going to give it back to perhaps Ryan also for the last few minutes, because I'm going to have to prepare my stuff.
Yeah, thanks, mate. Do you want me to grab it, guys, or yeah?
Whatever works.
Yeah, cool. Okay. Well, we might as well have a quick look at what's coming up in the data, because obviously that's what all our eyeballs are on. So CPI, we're expecting it to come in unchanged, 3.1%, with the core coming down 2 pips. Now, you remember for last month that we had a lot of shenanigans going on in this one, where it's much stickier. A lot of that housing stuff playing into the number, shelter rents and all that palaver. So I think there's two-way risk. Either we see some of that washing out from last month, which means we see a far softer number, or that stuff's still going on and we see the number pretty sticky. So this CPI is obviously comes before the PCE data, which is the Fed's preferred method, which may have shown a bit of a cleaner number, but the market's still going to move on this. So, I mean, I've got a question for you guys. Are we still likely to see the dollar rallies generally getting hit as they have been for the last few weeks now on strong numbers, or is this going to change the needle a bit if we get another hot CPI number here? Who wants to take that one, Stel?
I think I think right now with the rate projections and in the event that the inflation remains sticky, it's going to be hard for the dollar to sell off. I think just because, yeah, well, one, I was taking a look at rate cuts historically, and typically we see rate cuts towards the late summer or fall when they actually begin. And I think that Jerome is, although he's starting to suggest slight dovishness, I don't think he's gone full dove yet. And I think that the ECB might beat them to it, which could keep the dollar afloat. You know, if you would have told me that equities were going to be up, you know, as much as they are on the year and the dollar was also going to be up, I would have been surprised. In the event that equities do pare back, I think that there's a decent chance that the dollar could remain bid slightly, but I think that rallies up to 103.50 to 104 right now get sold, and then it's going to get a lot tougher of a call in the event we're back up there.
Ryan, I'm going to answer your question very directly. I think if inflation beats to the upside, if it's a small beat, say 0.1 higher in the core and maybe even 0.1 higher in headline CPI, I think dollar rallies will be sold. That's my opinion. I think we remain in this mode for now. Yields is what's driving everything, and that's what I'm going to be keeping my eye on. So if we do manage to break that support that I showed before, I think it's game over, at least in the short term for the dollar as well. But obviously, if there's a big surprise to the upside in inflation, then the dollar should hold on to gains. But if it's not a big surprise to the upside, I think it's going to get sold into the rally. My humble opinion, as always.
Yeah, I think you're right as well. I'm going to be looking at dollar yen because we've had a ton more sources pieces out from GG and Bloomberg and the like. Yeah, I think the market's got to the point now where, okay, another sources piece, we know what's going on, we know the rumours. It's a bit bored of getting those sources pieces anymore. Hence why we might have found a bit of a bottom. We had UEDA overnight as well, speaking a bit more of a cautionary tone. Not quite there yet, or we're not willing to admit we're quite there yet. So leaves the door open for them not to do anything or be a bit more cautious, as I say, in their tone. But I think this is one pair you got to look at potentially for a rally hitting contender, because we know it's pretty much, I'd say 90% now done. They're going to do something, the Bank of Japan, and we're waiting just for that confirmation. So I'm going to be looking at a decent rally in this one to hit it. From a dollar point of view, get a bit short on this one, but I want on a decent level. If we get up into 148 and a half, that might be a bit tempting for me. We have got just over a minute until the data, so we can have that up for you as well. I know Dale's got his guest coming as well.
Just want to point out, for some reason, the data flash tool isn't working at the moment, so
yeah,
we're going to be in contact with them. I don't know why.
I wondered if it was just me when I opened it up, but we can call it out, and this one's quick enough. I'm looking forward to Dale's guest, Steve Miller, because he's been he's nailed this gold move for the last few months. I remember his interview early December, and talking about gold having a little pullback to maybe 2025 off that first spike higher that we got back then, up to what was it, 2170 or something. And he got the pullback, and then it's gone off since. So yeah, I'm looking forward to that interview.
Good memory
there. Yeah. So I watch your interviews, Dale. I may have to catch them up, but I do keep on top of them.
All right. Okay. So we have 10 seconds to go. Let's see what the random number generator brings us. All right.
Here we go.
And
Oh, equities are
oh,
falling.
it's 0.1
What's up?
higher than expected.
Yeah, on both. Both are higher than expected, 3.2 and 3.8. So
Wow, dollars
sticky.
ripping.
There we
Dollars
go.
up about 0.25% on that. All right.
Beautiful. Nice call, Ryan, on the end popping. Yesterday we talked about 48.50 being an area. Is that what you're looking at? Or are you going to do
Yeah,
it in
just
here?
up there, 40s, 50s. Yeah,
Okay.
somewhere around there.
And this
So-
should be a pullback in metals to buy. And that's a great segue for bringing in Ask Slim, Steve
Yep, I'll
Miller.
hand it over to you, mate. Let me just stop sharing. All yours, mate. Have a great interview, mate.
What
Yeah,
a great presentation by the team. I should get ill more often so we could
Good to be on
hear
with you guys today.
hear from other voices. So thank you, team. Thank you, everyone. And welcome back to F.A.C.E, Steve.
Hey,
How are you?
thanks. Good. Good to be back. How are you doing?
Good to have you.
Yeah.
So why don't we just get you going, and you could share your screen and we could talk about what you've been seeing in the markets. I'm trying to.
Okay.
So
Well, do you have any specific area you'd like to start?
yeah, let's start with equities. I've been watching your excellent YouTube videos too. So besides interviewing you, I go and check some of the stuff I'm doing. I always see on the right-hand side with your presentations. And as of late, you've been looking for some sloppiness or at least a minor correction in equities. And, being perfectly on time is tough when you're top picking, but you still have conviction that we're in the zone. And it's just a matter of how deep it's going to be. So your cycle work is really some of the best stuff I've seen. So
Appreciate that. Really do.
Yeah.
Can you see my S&P charts up there right now?
they are there.
Good. Okay. So for those people that are new, I'm a cycle analyst, really one of the pioneers in it. We look at being able to project in both price and time, which is
Do you remember
rare.
Walter Bressert?
Yeah, I know him. I knew him, and
Okay.
I knew his son also. So I did know them. Yes.
Is that where you kind of picked up your interest? He was really kind of a pioneer. I mean, it goes back to actually when I was young. And
Yeah.
that was
Well, it's
quite a while ago.
I've been a student of market cycles for about the last 48 years. I've been a trader
Okay.
for 50 years since I was a member of the CBOE starting in 1974. And
Okay.
when I was in high school, I was in a rock band, and my drummer, the band broke up. He moved to California, and I went to visit him in 1975, and he handed me a book, Profit Magic of Stock Transaction Timing, which was written by J.M. Hurst, and he is the guy. He is the grandfather of cycle analysis. And so I read that book and began to study the work, and then the work that you're seeing right now on the screen has evolved from what J.M. Hurst put out. It's different than most other cycle analysts in some ways, but really sticks with the overall premises of the fact that there are normal ebb and flows in the markets of money flow, really. So what we do is really look at the money flows. On the bottom are cycle brackets. It's a drawing tool that just gives you the sense of the normal rhythms that are in the market, or the heartbeats. And then the actual trading turns out different. And when you look at the actual trading in the market, it then gives you important messages. In this case, this is the whole bull market. You're looking right here on the weekly chart, going back to the October lows, which the cyclical patterns nailed. And you can see how the actual trading was in here versus what the trading would be if it were the ideal on the bottom. And when it peaks more on the right side, it's called the right-hand translation, and that gives you this upward trend where you have the higher troughs, as you could see. And as you could see, these yellow areas are periods of risk. And that is when you get minor cycle outflows and dominant cycle outflows is when you get the biggest corrections. And when you're in a bull market, they're just going to correct into support areas. This one was 10.9% back into last October. And that's, pretty normal when you have corrections of, 8 to 15%. And there's one due right now in the market right here. Our projection for the year for the stock market, when I did my year-end projection in January, was that the market would trade up to about 5,100 in an extension of the bull market. And I thought that would come second half of the year. This actually was stronger than our bullish projections that we had. This right over here, this line is our reversal scout. It's proprietary momentum indicator. And when it turns up, it confirms the bottom. And you can see it's been in this upward bullish mode the whole way. And that has told us, along with the shorter term patterns, that the market was still bullish. We have not turned bearish yet, even though the market has gone past our upside objectives, because we're market agnostic, really. We just let the markets tell us. This has still been positive. I'm going to switch over to the daily chart here, and you can see in here these same cycle patterns where it keeps trading up. And just looking at the short term over here, you get these sell signals right over here on the candlesticks that are highlighted in red. And that gives us a warning that this has basically, in a topping area and likely to get a minor pullback. But you could see it's still pointing to just coming down to support. And then very likely what will happen is that this, whoops, I want to just be able to duplicate this and you get an idea that the next cycle will then be pointing up here again for another rally while it's making the peak on the weekly chart. So this is all bullish. This is the slim ribbon, which is bullish, still an upward, giving support to the market. This is the slim ribbon PO on the bottom. And what that gives you is the upward momentum resumption signals with those upside arrows when it's green. So this is all bullish. And, even though it's extended, even though we're trading at, 188% of market cap to GDP, all of those things are super extended, super ridiculous, if you ask me, and a good reason to expect a pretty good sizable correction. Until the market tells you that it's ready to correct, it's not. So overall, we've been positive, and this is still in those positive formations. Money has not begun to flow out.
Okay, so I see on the chart on the left-hand side a cycle trough in May. And when I see that, I think of your darker blue one. Looks like
this one up here. Let me just blow that up right over here so you could see. So this is
and you know what that would play into, Steve, is say the market's correcting into May, and you're going to start to hear people chanting sell in May and go away right when we're reaching the trough of the correction, and get shorts loaded up in there for the next advance.
Yeah, well, the probability of the market falling past the May period is extremely small.
Yeah.
The probability, you see this period of risk March through May.
Yeah.
That red right over there. So sometime in March, we're expecting a peaking to occur. But generally, the downside, the biggest accelerations are very much at the end of the cycle period where there's a capitulation. You could see right over here, final couple of weeks right over here, final 3 weeks right over here, final month right over here. So sometime in, April, May is when the acceleration could come to the downside. It will likely be brief. It will likely stay in this construct of a bullish market.
Okay. Nice.
Yeah, thank you. What would you like to see next?
Well, just like my compadre Ryan said, last time you were on, you were bullish gold and loaded up on miners. That may have been premature because miners did sell off for a while, but you're being definitely vindicated now. And I caught your recent gold video, and I think you actually showed a chart, a logarithmic chart by Tavi Costa.
Yes.
Correct?
Yes.
And that is really mind-blowing.
Yes, that one points up to 9-10,000 based on the log scale.
Yeah.
Yeah. So this, again, is the cycle analysis on the gold markets right over here. On the left is the weekly, on the right is the daily. I'm going to blow up the weekly right over here. And you could see that this cycle right over here, the minor one, actually that low came just a little bit off. It kind of messed me up a little bit. It really shouldn't have. But then once it breaks out of the triangle, I know we're in the resumption on the minor cycle on the bottom right over here. Moving up to projections, my projection for the year was minimum 2,200, which we've seen, and probably 2,300, which you could see this is pointing up to right over here. But then it really is pointing to much higher levels in here. 2,500, 2,600, I think is fairly likely in this year, and maybe even much higher than that over the next coming years. I'm going to bring in a monthly chart right over here for you to see. And the monthly chart right over here points up to that areas up there, which is in the 3,000s potentially. See this big monthly gold cycle right over here. I mean, that goes way, way out into 26, 27, 2026, 2027. And this extension is at 2335. I think that's highly likely this year, with potentially to this level up here, 2517. This is super bullish. Now, you could see over here, there's a minor cycle that probably corrects sometime into the summer. And then this next rising phase right over here could easily be much stronger up there than I have the minor phase drawn. It likely would get up into this area well past the 2335. Up to that 2,600 area right there. When I look at, I'm gonna go back now to the weekly chart because we're looking more current time. It really makes a lot of sense to me that we're going to get to that 2,300, 2,335 area in really the next few months in here without a lot of problem. You could see the cyclical patterns are beautiful in here, and they really speak to the fact that these prices were set up to rise. We went through this very, very long-term consolidation that you can see that was lasted from really out over here in 2020 out to this year. And that's over with. The consolidation is over with. This is like what that Tavi Costa analysis was, though I don't use log scale because it doesn't work well on cycle analysis. And here's the daily chart right over here. And you could see this is a just super positive pattern that we see in here. And you see those yellow corrective zones? And this is that one we're talking about here that comes out into April potentially. And then this rally period over here, mid-April through May, could give you that pop easily up over 2,300. Now, you know, I heard you guys talking about the dollar before, and, you know, there's a great inverse correlation between the dollar and the gold market. Now, that's not 100% correlation. There are times they do move together. I've shown videos on that. But look at this pattern in here in the dollar index. You know, if the dollar goes down, it takes more dollars to buy gold. It takes more dollars to buy everything. I mean, it's just as simple as that. So in this case, the dollar patterns are spectacular. And you could see, if you look at this minor cycle right in here, it's almost a perfect formation in here. The fact that it tagged the 78.6% says it will rally to the sell zones. You could see exactly what it did in there. You could see the momentum turns up here on the minor cycle. The momentum turns down here on the minor cycle. It says both of these cycles are bringing money outflows from the dollar. That would be, of course, inflows to the euro, inflows to the Japanese yen. That is all happening. Those are all bullish patterns that I've been looking for, and that's happening. You see the daily trough here in the end of May. So this comes down. It could easily get the first target over here is about 150. There's a little support at 101.5 on a shorter term, but 101.50 down to potentially 99.50 over there is where I expect the dollar to go in these next couple of months. And were that to happen, it's going to be a lot of stimulus for the gold market, for the metals market. Copper, platinum, silver, all of them have bottomed right now. Here's the short-term pattern that we see here in the dollar. Beautiful patterns that have 1/3 minor cycles and dominant cycles. This decline was expected. Here's your minor resistances, which brought the selling. The slim ribbon PO on the bottom, which is turning red. You can see what happens when it gets up here and then you get those signals. It moves back to the downside. That's probably going to happen out here. We may be getting a little bit of a bottoming in here and then a rally, but this is a sell zone over here in this period out here in April. So remember, I said the dollar moving up starting, I'm sorry, gold moving up starting in April. This points to the sell area for the dollar in April, which is a perfect inverse correlation in the cyclical patterns. It says, get ready to, after a bounce here in the dollar into something like the second week of April, get ready to buy euro, get ready to buy yen, get ready to buy gold in those minor dips.
Okay, so there's a big debate in bonds, Steve, and yields, and they've started to trend lower. I'm not looking at my screen. I know the CPI came in a little hot. Your view on rates?
Rates are going down.
Okay.
Okay, now I'm not, when I say that, I have not been, and I am not real confident that the Fed is going to do any significant rate cutting this year. But
the market will do it.
The market will do it. And, you know, I've been looking for maybe 2 rate cuts this year. It could only be more if the stock market is falling very hard. There's the traditionally, historically, the big declines in rates come as stock market is falling hard. Now, we're not looking for a real long decline in the stock market this year. So, I mean, when I put up TNX on the yields in here, and I'm going to keep the side by side up here for you to see because it's so clear. The market, you know, I mean, they went up to 5% with the Fed not really raising anymore on the 10-year yields, and then they went down to 3.6%, 3.7% with the Fed not ready to cut. The market's been so much more volatile than the Fed, who has just been stable and actually scared to death to make a mistake, which I don't blame them because their credibility is shot based on what they've done over these couple of decades. So you can see this little downturn in our momentum indicator right over here on the weekly chart. That says that this rally right over here is over in yields, and yields, our projection is to come down to best case 3.9, but really projecting down over here to 3.6 sometime between now and May. Interesting. That aligns with the decline in the stock market, which makes all kinds of sense because if the stock market is actually getting hit, the bond market is going to be pricing in the Fed's action. So that's the period right over here that aligns nicely with the stock market. Now you see this really is turning over in the resistance area. Now we originally had thought that this rally right in here in this rising phase could get higher into the mid to high 4s. And then it told us basically that it was not happening. If you look here on the daily chart, you will also see, let me just get the pointer up here, that this has a little bottoming going on right over here. And then likely we're going to get a little bit of an uptick here in yields. I have this projected up to 4.3. I have some doubts it will get up that high. We'll see where the resistances are once this trough is firm in here. But then I have a sell pending, buy treasury futures in this bounce right over here. And so, in other words, this bounce on the daily chart right over here is equivalent to some little bounce here on the weekly chart. And then when you get after this rally over here, then the weekly chart resumes back to the downside, and so does the daily, because the principle of synchronicity says that this will come down more, and the ultimate trough on the weekly will match up with an ultimate trough on the daily. So all of these things are pointing to the fact that you could get a little bounce in yields right over here, but it's likely to move down again and move down sharply. That will be food for the metals.
All right. Any technical perspective on the underperformance of silver compared to gold, and the gold silver ratio trading in the low 90s, you know, has favored gold. Can you see that flipping? Um, and also maybe a comment on, since you believe platinum has bottomed, yesterday I think was a pretty key day for the gold silver, I mean the gold platinum spread. And most people haven't been around long enough to remember platinum trading at $1,000 premium to gold rather
Yeah,
than a
that's
$1,000 discount.
That's true. So let's just put up the platinum chart, and we'll talk about that. You know, that's the question you just asked about the relationship between gold and silver, and the fact that it's really lagging is significant in that normally when there's a good rally in those markets, then the beta in silver is much higher relative to gold. So, you know, you get that ratio really taking a dive. That's maybe just starting, not quite yet. And I actually think that people really haven't caught on yet to what this metals move could be. And there also might be some psychology around the Bitcoin move and gold, and the silver and platinum, copper, they're much more of industrial metals. They're not an anti-dollar play as much. So
Right.
you might be getting the anti-dollar play like in Bitcoin, going on in gold first. I happen to think that silver is going to catch up in a big way. Platinum, you can see in here, has bottomed, and on the weekly chart has bottomed also on that minor cycle. So that says that it's likely to come up into the resistance area. That's about 970 right there. If this didn't get down to this 78.6, which is pretty deep correction, I would have this projected much higher, but it might need to do some more workout over here in the summer before it can really get that sizable move. You can see right over here on the daily chart, the resistance here is at about 970. That's this peak of this level right over here. And then over here is that $1,000 level right there, which is a potential for it to get up to in this cycle. I would guess around 970, pull back, and then this next one out over here, get up stronger over there. Let it do some work over here, is what it really looks like. But this is turning positive. You see here the slim ribbon PO has turned green as the slim ribbon is turning green here. And the reversal scout on the weekly is now turning up. So these are nice signals in here that something good is happening in here. I heard you guys talking about the silver miners. And last time I was on here, I talked about the fact that I was buying them and loading up on them. Believe it or not, I'm still buying. And I believe that once investors have not caught up yet to the fact that I'm just going to put up SILJ while we're talking about that.
Yeah, it
They
just
have
cleaned
not,
out stops under $8 and turned higher.
they have not even caught on to the fact yet that there is a huge, I haven't updated this one yet, as you can see, there is huge amount of leverage in these companies, because most of them have pretty low fixed mining costs. And once this price of silver gets up, their earnings just explode. So there's that potential in there. Now you could see this bottom formed in here early on a double bottom. And you're right, there was a capitulation here and a clean out. Now look here, you can see the momentum turning up right over there. I think this is just the beginning. Now, if you get over this 78.6, which is $10 right over there, then what that's going to do is start to give me a sense that this is a major bottom in here and begin to move up in a way. I've had several people and several sites ask, what is my best play of the year? And it's been SILJ, because I think that the leverage condition in here is really could get this to pop. And you know, the longer term numbers out there are, you know, could easily get up into the 12s in here for you know, a 25-30% gain, and maybe even well higher than that, depending on how the silver market does. This is just one of my favorites in there.
All right, you know what people aren't talking about because it's been so disappointing. I'd like your view on WTI if you have it, and we could wrap it with that.
Okay, so you want oil?
Yeah.
Okay. So here's the oil market right over here. And this is interesting because there was in cycle analysis, often there are energetic shifts in the market. We have to watch for that. And the fact that this low over here was above this low keyed us into that. So you see this blue cycle right over there, which has shifted over from where the other low was right over here. That gives this shape something more positive. These cycles in the bottom here are heating oil and gasoline, and you can see that oil is really following heating oil and gasoline. So you're in this rising phase, which is a bear flag forming right in here underneath this, underneath these resistances or in these resistances. So I'm looking for oil to turn over and get down under 70 out over here in the summertime.
Okay.
But right now it's just making this what I think is a bear flag being driven by the products, the action in the products right over here.
The charts are pretty similar to the 10-year yield. I've noticed over.
A little bit further out in time. It's not quite phased properly. I would say it's out of phase with them, but I see what you're saying. Yes.
Yeah. And we have a request for uranium, and I
do not
promise
have
that'll be it.
uranium. Sorry.
Okay.
I don't do uranium.
So Barry, go get your Geiger counter out, and you come back and report to us. So Steve, another excellent presentation.
Thank you.
When were you at the SIBO?
From 1974 to 1991.
Oh my gosh. Well, you know what? We probably bumped into each other at the Sign of the Trader.
Yeah, I'm sure we did. I was a member of the Board of Trade and the Merc at the same time. So
okay. Yeah, I was at the Merc. So I would wander over to your territory and meet my buddies at the Sign of the Trader.
Yep. I
probably
saw you there.
Yeah. Anyway, that was we're still in it. I have to say that we are warriors.
Yeah, absolutely.
To survive in
here
this
I am,
business.
74 years old. May will be my 50th anniversary as a trader. So,
wow.
And I, still feel young and vibrant, and you can see the work that I do. So it keeps me young.
Yeah. Love of what you do keeps you young.
Right.
And, so, I recommend people check you out, check out your videos, and Steve, I pay attention to what Steve Miller is looking at and what he's saying. So if I do, maybe you should consider that too.
That's great. Here's my website up there.
Yeah.
slim.com. Go check it out. And we have a new day trader service that is mind-boggling. As I put some of my most advanced applications into it. So get up there, click that learn button and take advantage of that great special we have going on now.
So two dinosaurs that have not stepped into the tar pit yet.
Yeah.
You can't learn experience. You have to live it.
Yeah.
And it's always a pleasure and honor to talk to you, Steve. Thank you for your time today.
Sure thing. Glad to be here and see you next time.
All right.
Bye-bye.
Steve Miller, everyone, on X at Ask Slim. And that's going to be a wrap for us today on Turnaround Tuesday. Good hunting. Could join the team in 17 minutes on the morning edge. Don't just count your gold bars and silver coins and shares. Count your blessings. Adios, everyone. Thank you, Bruno. People are thanking you, Steve.